our Chief Financial Officer, to this analyst and fund manager meet. Due to COVID-induced restrictions, we could not invite all the analysts for a physical meeting, and hence a few analyst fund managers are present at the venue and the rest of you are joining virtually. All the participants are requested to note that this meeting is being recorded and the audio and video recording of this meeting together with the transcript would be uploaded on our website and also submitted to the stock exchanges. Further, I would also like to brief you about certain important points for smooth conduct of this meeting. All of you who are joining virtually have been placed on mute mode by the host to avoid any disturbance arising from the background noise. During the question and answer session, the names of those who are attending virtually and already registered with us for asking questions will be called and the respective speaker will be unmuted by the host. Thereafter, the analysts or fund managers who are attending the meeting physically may ask their questions. The others who are participating virtually and wish to ask questions may raise their hand by clicking on raise hand icon on the right hand bottom of the WebEx page. I would request all the speaker shareholders to be brief while asking their questions / queries. I now request Narayan Krishna Mohan to brief on company's performance and other related topics. Over to you, Mohan.
Thanks, Manor. Welcome to this meeting today. Really a pleasure to be here with you. We're still in COVID times, hence we had to do this hybrid mode, but glad to see some of you here in person and also to the on the phone. A warm welcome from my side. We announced our third quarter results a few weeks ago, so there is no further numbers to be announced, and then I think you have already analyzed all the numbers, probably better than what we have. So look forward to hearing from you as well. And I did get a few requests for this meeting, and then I suggested to Manor that, why don't we invite the larger audience and then we address whatever questions you have. Now, before we go to the Q&A, I would speak maybe for 10-15 minutes and give you a view on what I think of what's happening today overall from a global perspective and India perspective, and how do I see things evolving. We are in unprecedented times. The last couple of years have been COVID impacted for the entire world, and India, of course, was quite hard hit in the last couple of years. And now at this point in time, the whole world is shocked with what's happening in Eastern Europe with Ukraine and Russia, which makes probably any business projections virtually impossible to do. How demand will develop, how inflation will impact, these are all very open questions where nobody has an answer. We probably would get a better, when we thought about this meeting, it was prior to this incident. And at that point of time, we probably all had our Excel sheets and certain projections, which we can all throw out of the window at this point in time, which will also restrict me from making any crystal ball gazing for the future. And on top of the compliance we require from SEBI, we also have this big uncertainty looming ahead of us. I really hope and wish that this thing comes to an end so that we have a normal, predictable business scenario. I mean, just to see the impact of this, even prior to this incident, with COVID, with the supply chain issues, with oil prices going through the roof, even prior to the Russian crisis, it was something which was still predictable from a business perspective. You could make certain projections, but with what's happened in the last couple of weeks, it's virtually impossible to know where oil would go, where gas would go, what would be the impact on demand, what would be the impact on the cost side. So it makes things very difficult. From a company perspective, what we are doing is we are living by the day as well, as to what happens and how do we react to it. We have very robust business management philosophies and principles where we are also reacting to this situation on a day-to-day basis. We may be far away from where the action is at this point in time, but the impact of this is felt even in India. I mean, if you look at purely the energy prices that we are having, was it a week ago or 10 days ago, even in the state of Gujarat where we are operating, the Gujarat government hiked natural gas prices by 75% overnight. This is something which will have implications for all manufacturing facilities. And I just gave you an example of Gujarat, but then this is countrywide. I mean, wherever you have energy requirements, there's been a tremendous shock. And now, of course, for all manufacturing companies, it's a question of how much of this you can pass on through to your customers and to protect your margins and to, at the same time, make sure that you have business continuity. From a supply chain perspective as well, if you look at availability of ships, which was already a topic prior to this problem, the availability of ships compounded with high fuel costs have resulted in a tremendous escalation of shipping costs, anywhere between, depending on what shipping routes you are using, from 3x to 5x over the course of the last 1 year. This has been the kind of escalation that we've seen in logistics costs. So that's the kind of environment that we are in from that perspective. And if you are a company which is, thankfully BASF India Limited is not to that extent exposed to it, but if you are anywhere in the metal industry, where in the context and of steel, in the context of aluminium or nickel, the availability of these commodities will in the medium term be a challenge, because we are highly dependent on Russia for supplies of these products from a global perspective. So the global balance of this will get impacted. There is also the talk about what happens with many of our products which come in from Western Europe. So obviously Western Europe is impacted by what happens from a cost position and also from an availability position of natural gas and oil, which is, of course, it's an international commodity. You can buy it from various places, but what happens in one place does have an impact on a global level. So that's the kind of environment that we are operating in today. And this is not what I had planned when I asked to speak or when we agreed to speak at that point. Yeah? But we have to take this into account that a lot of things have changed in the last couple of weeks. That said, now if I were to reflect, I'll take a little bit of time to reflect over the last 3 years that I've been in this position. So I took over this position back in April 2019. And I think the first time I met you as a community was somewhere in February 2020, a few months after I took over this role. At that point of time, our performance was not really up to the mark, and this is something which I admitted in that meeting, and that is going to be our number one objective, to make sure that we perform to our potential. There were a few questions which I think will be in the room even today. What do we expect in the context of our returns and our ROCE factors and so on? And I still remember my answer from that day that we don't really have a target for a ROCE by individual companies, but as BASF Group, we target 10% as a return on capital employed, and that is something which is very public information. And what I had said at that point in time is that I would like to contribute positively to that rather than like be a drag, because 10% in the world means somebody will be below 10, somebody will be about 10. So I'm really glad that in the last couple of years, despite the challenges of COVID, we've been able to deliver on those ROCE targets. I think the last financial year we ended somewhere around 16-17%, and this year in the first 9 months we are about 20% in terms of ROCE. Now, this comes against going back again. When the lockdown hit us, the first lockdown hit us in March 2020, it was an unprecedented scenario again for us. There was no playbook by way of which we could operate. Most of our facilities were shut down for a couple of months. Only the essential goods were running. Then we had also our customers facing a lot of challenges, whether it was the automotive industry, whether it was the construction industry, or these industries were badly affected in the first lockdown. But there were other parts of our portfolio, like for example, nutrition or care chemicals or ag, which was not really affected because they were considered to be essential commodities for the country. So in that year, we did a fair amount of work in terms of our business management practices, whether it was our working capital management, whether it was our cost management, and last but not the least, how to gain market share at a time when the GDP was shrinking, where the industrial output in the country was not really growing to that effect. How do we grow business? And the answer to that is very simplistic, and I mentioned that a couple of years ago. It is about getting closer to customers. I mean, no rocket science. This is what every CEO says. I also said the same thing. But I'm really proud of my team and my company, which actually managed to do that, to convert projects into orders and grow sales at a time when the overall economy was going down. So we had a significant increase of volumes in that year of what would be that financial year 21, the way we put it. So it was a year where we built a solid base. We increased our operating margins. We kept our costs flat, and we increased our efficiencies in terms of our productivity, in terms of throughput at our plants, and we gained share in the market. So that was more or less the playbook by way of which we went, basics of business. And those who were there in the room 2 years ago remember that I exactly said that this is what we're set to do. Then last year came the second wave in April and May, which also hit us quite hard. Just to tell you how it hit us as a company, on top of all the business issues, we also lost 17 colleagues. As 17 colleagues, we had 53 family members of our colleagues who also passed away in the second wave. We did a lot in terms of supporting our colleagues and their families in the context of vaccinations, in the context of hospitalization, support their medical care, and not just our employees, but also our contract workers, the communities around us, the nation at large. I mean, you saw a number of things regarding oxygen shortages in the country. And I remember flying in along with the Air Force. So in a matter of 10 days, we flew in 3 plane loads of catalysts, which enabled conversion of nitrogen plants to oxygen plants and create new oxygen plants in the country. So to a large extent, BASF was one of the companies which supported the country in mitigating the challenges we had in the context of medical oxygen. So we helped our communities, we helped our employees, and also the nation at large. All the while, business did not suffer. My staff working from home, we made sure that we do come up with new projects, we do come up with growth projects. And when I look at the year now, the 9 months that we've had, we've already crossed the previous full year's turnover. When you look at the profitability as well, in terms of any metrics that you take, we've surpassed the 12 months of last year with a quarter to go. So I don't give now any forecast of what the quarter is going to look like. But what I would like to say is a significant portion of that growth came from volumes. So we had a double-digit growth in volumes. we did increase prices where obviously with the oil price. Now I still remember the oil price was somewhere around $60 last March. And today it's about whatever 110, 120. It keeps fluctuating all the time. So the oil prices have principally doubled, and a significant portion of our business, especially in the chemicals and materials portfolio, is largely oil price dependent. And we've been able to push through these prices into the market. They are commodities. I mean, there are questions always, do you have pricing power in these businesses? The fact of the matter is, in commodities also, when you have this kind of a surge in oil prices, the customers also understand that there is no way to go but to hike prices. And which is where we've been pretty successful in our chemicals and materials portfolio to mitigate the energy as well as raw material price hikes, and keep our margins intact in some cases, and in many cases even further improve our margins. So it's been a very active time for the colleagues in the company, in the context of discussions at our customers, where typically, you used to have situations where it would be difficult in a year to go back to a customer, but those paradigms have been changed with the current environment, where if there are things which have dropped down from a year pricing to a quarter pricing, which were quarter has become monthly. And there are other products which have become daily pricing. I mean, it's like price is valid for 24 hours or 48 hours, take it. I mean, because tomorrow my purchase price also changes. So my sales force has been very, very active, and I'm really proud of them that they have been able to make sure that we make a good progress in our objective of profitable growth. That said, from a Indian industry perspective, what I have observed in the last couple of years, and this is now the COVID related scenario, is that the A-list customers in any industry have gained market shares. Whether you talk construction industry, whether you talk paint industry, automotive industry, the organized players, if I may say so, and they have gained market share. I guess the logic I have is the ability of the small and mid-sized players to finance their activities during COVID with the availability of credit from banks, or the MSME sector has suffered. Yeah? And we see that in our customer profile as well. The customers who are, I wouldn't want to name one or the other because then the others get offended. But the top end customers have really increased their offtake with us. And the overall market has not really grown. And the only, so there has been a consolidation. So I attended being on the board of one of these chambers. And there was this colleague who represented the construction industry, and he gave some alarming statistics. What he said was, prior to COVID, there were about 22,000 developers in the country. Today, it's in 3 digits. Yeah, so that's the kind of consolidation that has happened in the construction industry. So the top end of the organized players, if you may call it, they have really done well. And now that has a positive impact on companies like BASF, because when we do our business is also skewed towards these organized players. Our exposure to the small scale industry and the MSME is lower than we are active in that space. We do have distribution business and so on, but the percentage of our business that's in that field is a lot lower than what we have with organized players. So this was another aspect which helped us grow our business to a large extent. Now, that's the kind of environment that we were in, and I talked a little bit about what we did. And if you remember what I said a couple of years ago, the way I run any business, and it's not about me, it's about my team, which eventually executes all of that. But it is about what I call the right to exist. And the right to exist is that we make a profitable growth scenario. And that was, I said, my number one objective, and it still stays the same. It doesn't change, and it hasn't changed in the last 15 years. So I think it's not likely to change going forward as well. Second topic is about investing for this growth, investing into technologies and assets. So we continue to look at what opportunities we have, which areas we can invest and grow. And the third aspect is about people development, because we all have an end sell-by date. We all move on, we all retire or whatever. So I need to create the next generation of people who will take over this business from us. So these have been my three focus areas historically, and they continue to be the same. These are the three things which I work on along with my management team on a regular basis. So these are three topics which are burning topics for us. And the way I see it, things are changing. How we do business is changing. Whether it is in the context of the office per se, what we had as 500-600 people coming to the office on a regular basis. Today you see 100-150 people at best in good times, because work from home is much more active. We have flexibility in terms of the way we work. It also means investments into digital ways of working. We were not set up as a company to work digitally or remotely, so we had to make sure that this works out. It's an ongoing process. We are not there yet where we would like to be. So we would invest there as well, the way we work. Then the training of people to be able to do technical support we are a touch and feel industry, old school. We need to meet people, and now how do we manage the same amount of technical support even from a virtual setting? These are all topics which are requiring significant attention from a company like ours also going forward. People development, the kind of skill sets that we require from people. This is also changing, and this is something which we are focused on. In terms of brick and mortar assets, I can't talk about what's not yet in the public domain, but in what we've done even during the COVID period and currently ongoing is we've doubled our capacity for Celasto. Last year we started up that plant. Just last week I was in Dahej and I saw the plant. The plant's working beautifully, and it's already reached reasonably good operating rates. Of the construction for doubling our capacity of dispersions, which I had already announced some time ago, is going pretty well, and sometime middle of the year, end Q2, early Q3, we should have the startup of that, so that should give us additional volumes. At the moment we are kind of sold out in that business. We are evaluating possibilities in various other segments where we can grow capacities, because we see the potential in the market to do so. Now here I would take a step back and again talk about what I see in the market. Now, what the Honorable Prime Minister announced with Atmanirbhar Bharat and the PLI schemes and what's happening there. There are a few core industries which are, the chemicals industry per se is not part of any PLI, but you can see that many of our customer industries are part of the PLI schemes. Somehow with the mandate to have a local production content as the value add required to be eligible for PLI, that requires an ecosystem approach in the country. And you can see whether it was, what was it, yesterday or day before, when the automotive thing was announced, you can see a kind of an ecosystem approach in there. So there are multiple aspects of the tiers addressed. Same was the case when they announced for the electromobility. the e-mobility part, there is an ecosystem approach. So between the cell manufacturer, the cathode, the anode, and so on. That's a fundamental change in how the government thinks, in my opinion. Yeah? So again, it's what I interpret out of what they are saying and announcing. Historically, when I look at the chemical industry, we had a few public sector units, and then you had a giant company which was pretty much isolated in their silos of operations. Very different from how the chemical industry has evolved in the world. So whether it is the Jurong Island concept that one talks about, or the Antwerp hub concept where we are part of it, it has always been an ecosystem, because no one company can utilize everything that comes out of a refinery or a cracker. You simply don't have the portfolio at a given point in time to address everything, which is why ecosystem approach is required. And what I see is that the thought process within the country is changing towards that. There is more collaboration required, and there seems to be openness amongst the industrial players in the country to have those collaborations. So I see that as a positive for the industrialization of the country going forward, which should have a positive impact for BASF as a company, because BASF is not really into these products which eventually is used by a consumer. However, whenever these industries, whether it's electronics, whether it's automotive or textiles, pharmaceuticals or ag, whenever these industries grow, BASF is a supplier of chemicals and materials to these industries, and as a consequence, we have good opportunities in terms of further business development. There have always been questions to me about what is BASF's investment. I talked about like we invest for the future, and what is BASF's investment philosophy. Now, in that context, BASF invests when we have a market for, in a country like India, which is not a raw material rich country, we would invest where the market requires, or where there's a sufficient market demand to invest in a world scale plant. Now, if I look at BASF's portfolio, the areas where the business or the market has grown sufficiently to create a reasonable economy of scale kind of manufacturing facility for BASF has invested in those areas of our portfolio. Now, if you look at the Indian chemical industry, we are quite well developed in the refinery space, in the upstream petrochemical space, and we are also pretty good in the API space for the generic ag and pharma APIs. These are all not BASF portfolios, so this is not our play. We are in between. Yeah? So we could start off with a cracker when there is a sufficient possibility for our downstream products, which is what we are doing in China today. Yeah? So in the context of India, for many of our molecules, the overall demand in the country may be about 15-20% of a world scale plant. Now, with that kind of demand, it is not yet time for BASF to invest locally, which is where some of you had questions as to our trading business. Now, the trading business, BASF invests where we have a market, or we have, like for example, we have this Verbund site in Malaysia, which is a raw material country. So where there is a certain reason why we are invested in Malaysia. Now, in Malaysia, we invested 20 years ago knowing that 80% of the product will have to be exported, but there was export competitiveness out there. Now, for that portfolio to be invested in India as an export hub does not make sense, because we do not have the raw materials in the country. You import the raw materials, you have high energy costs, high logistic costs, and then you are not export competitive. So it does not make a lot of sense there. Now, where I see opportunities also for the Indian market is that with what's happening in the industrialization of the country, a step that we missed about 25 years ago, if we would have started that, we would have been in a much better place as a country. But of course, the government recognizes it, and which is what the Make in India, Atmanirbhar Bharat is all about, to get that manufacturing footprint in the country. And I'm pretty confident that as that goes along the way, there will be opportunities for us to consider what we can do as a company in this country. And today, I can't name one or the other investment. I'm not even allowed to. But it's an ongoing process in the company. And the way it works is as and when the market is, what we do with our trading business is seed for a potential future investment. We don't trade for the sake of trading. Genetically, BASF is not a trader. We are a manufacturer. But to establish a position, you can't just come when the market is fully developed and then say, okay, now I want to be in the country. It doesn't work. Yeah, so which is why, even if you look at our history in China, we grew over 25, 30 years. Yeah, and when it reaches a certain point, it becomes the right time for BASF to consider a plant. And we would not invest in a subscale plant because that really doesn't make any sense for a company like BASF. Then there were other questions regarding what is the criteria for investment. Yeah, so criteria for investment definitely is a market which is making sense for us to invest. Obviously, we need the raw material sources. We need the economics behind. And last but not the least, an environment which the ease of doing business, what the country talks about. This is something which is also, at the end of the day, capital allocation within BASF is a function of all of these factors. And I must say that over the last few years, the country has made tremendous progress in the context of ease of doing business, in the context of being more industry friendly. The approvals are a lot faster than what they were before. We are still not at the same level as, for example, a Southeast Asian country or so. We still need to catch up, but I'm seeing tremendous progress there. And every time, the beauty of all this is when we do talk to the people in the bureaucracy or in the government, when you bring up genuine topics, they do listen to you and they do support that kind of initiative. So I see that, I mean, just look at the corporate tax structures, which have been significantly changed over the last couple of years. To make, and the basis of that was not that we just wanted to reduce tax, but it was simply what's the competitive environment against alternate investments. I mean, if we talk about the China plus one strategy, I mean, where will people go? People will look at those areas where there are maximum returns. And obviously, if a couple of years ago, prior to this tax regime, for every dollar you earned, you gave up almost 45 cents in various forms of taxations. And that really did not make sense against a Vietnam or a Thailand or a Singapore, where probably the outgo was around 20%. So clearly, the environment is a lot better than what it was a couple of years ago. I believe that demand will continue to grow. The demographics are favorable. We've been stuck around the $2,000 per capita mark for quite some time. But I believe that as the country progresses, there will be positive development there, and that would eventually end up with higher consumption by the population, which would then trigger, with the large base that we have as a population base and the middle class really growing. I mean, these are cliched stuff which we've heard for the last 15 years, but I do see a positive development in that context. What I also see is improvement in the quality standards. So what we have from the government as the Bureau of Indian Standards coming up with new regulations, what are the base qualities? If you look at the kind of white goods that you purchase, if you look at the quality of construction, these have significantly improved over the last 5-10 years. And a higher quality conscious environment does also trigger positive messages for companies like BASF. So I'm pretty optimistic, without mentioning what kind of products or investments we are looking at. But it's an ongoing process where the country management, my colleagues and I represent to the BASF Global Operating Division. So we run along the 11 operating divisions in the various segments, and to the board as to what are the opportunities in the country. Maybe a little bit about our own segments. Let me start with ag. I would say the financial year 21, so the previous year, was a good year from an ag perspective. We outperformed the market. We gained market share there significantly. The current financial year, the monsoon was quite erratic, like I've mentioned also in the previous quarterly topics, but we still managed to reach our budgets from the ag perspective. It's not a forecast, it's a wish that we have a normal monsoon this year, so that we can continue on our growth path. Just this week, there were a couple of questions on product launches. We launched a new product, first time ever we've entered the sugarcane market. So I was in Meerut on Tuesday, where we launched a new herbicide. In a couple of weeks, we'll be launching a new broad spectrum insecticide. So these are the two new products we will launch this year. Again, all available in public domain. And like I said a couple of years ago, our intention is to broaden our scope in terms of crops and geography, and introduce new products. Maybe a couple of products is what we are looking at. Like this year, we've launched these two products. And I'm pretty optimistic. What used to be a 500 crore business a few years ago, last year, for the calendar year, we closed around 1,400 crores as a business. So we've had almost tripled the business in about 5 to 6 years. That's been a good story for us. Then I go to the chemical segment. Chemical segment again is completely traded. Here we've had phenomenal growth, largely coming from the price increases on the based on because it's highly dependent on petrochemical oil prices, we've managed to gain market shares there as well in our product portfolio. Then comes the materials portfolio, where both in the monomers as well as in the performance materials segment, we've significantly increased our market share. We've grown volumes, we've grown profitability. So it's been a phenomenal story for us. And this is in a couple of years where the automotive industry, which is a large portion of this business, has not really, we are still not producing as many cars as we did in 2019 pre-COVID. But the results that you see is because of the gain in market shares, because of the new products that we've introduced in the market. That's where the increase comes from. The construction industry, which suffered quite a bit in 2020, the performance materials also goes in. We've divested our construction chemicals business, but we still have exposure to the construction industry with other businesses. Last year was a phenomenal growth in the construction industry as well, where when the industry came back up, with our projects with various players in the organized sector, we managed to significantly grow our business. Going to the industrial solutions, here again, like I mentioned, we are sold out in both our plants in Mangalore and Dahej from a dispersions perspective, and which is where the new plant will help us grow even more. I think last year was the highest ever EBIT that we earned in that business. Here again, the increase in raw material costs, whether it was materials like styrene or butyl acrylate or butadiene, they simply went through the roof. But we were able to pass on these costs, keep our margins at a reasonable level, supporting our customers, while delivering the goods. Now here, the next business, which is care and nutrition. In care and nutrition, the last year was not a very satisfying year for us. We suffered to some extent because we had global shortages of vitamins in the BASF portfolio, which impacted us in the country as well. We did have a margin squeeze coming from increase in fatty alcohol prices, which then we couldn't really pass that through to the same extent. So we had to absorb some of those costs, and which is where the care and nutrition portfolio did suffer, and it's one of the areas for us to work on and improve. On the surface technologies, we divested our construction chemicals business. So that obviously shrunk a significant part from the last time when we met. The business has shrunk significantly. It was a global divestiture. And on the automotive coatings business, there are some strategic projects running at this point in time to address both the growth and the profitability of this business. So I can't divulge more, but at this point in time, but what I can say is it's a hot topic. So these are three businesses: the care and nutrition, and the surface technologies, which are at this point of time high on the management attention. And it's something where we would like to repeat the performance in the other segments also here. I would address one more topic. I mean, there are always questions about long supply times, the kind of working capital that we have to maintain as a consequence of our shift from agency model to the merchandise model. I think my colleagues here, Mohit and Naren, have done a fantastic job along with the businesses to make sure that our working capital is very well under control. I mean, the kind of inventories and receivables in the order of magnitude of 60 to 70 days that we keep, with transit times of 4 to 6 weeks under normal circumstances for our materials, is a phenomenally tight supply chain, despite the challenges that we face on ocean freight across the world. Just to give you, globally BASF did an analysis as to what's the reliability in the context of ocean freight, intercontinental transportation. So, and thankfully I couldn't believe the numbers, but then a couple of weeks ago I was in a panel discussion with fellow colleagues, and the lady from Reliance, she presented actually the identical numbers. So I said, okay, someone else is saying the same thing, so I can use it somewhere. So the global reliability on supply chain is around 37-38%. 3 orders makes it on time. That's about it. It has fallen from somewhere in the 70s to in the 30s. BASF is not happy with its performance, but we are much above this 37 mark. We are closer to 50. So we make at least 1 and 2 orders arrive on time, despite all the challenges that we are facing. BASF used to be closer to 80%. And this is beyond our control, what's happening in the context of the global shipping market. The consolidation that has happened after years of non-profitability in the industry has essentially made this a very tight market. At this point of time, what we try to do is be better than our competition. And that's all that we can do. We can't change the shipping industry. And with the new regulations that are coming in the context of fuel usages regarding sulfur content in the fuel, what is likely to happen is a lot of ships need retrofitting. So the next 12 to 18 months is not going to change much in the shipping industry, in my opinion. But that's my opinion. Yeah. From the other challenge that we have on the automotive, I mean, again, I'm not speculating anything on the war. That's a completely different thing. Nobody knows what's going to happen there. But from a chip shortage perspective, the chip shortage, which does impact our customers and then consequently does impact us as well. The general consensus is the shortage is most likely to last this year as well. It will be better than previous year, but it will not be well supplied market even in 2022. So the best guess is it will take until 2023 for the chip things to normalize. That said, the war also has an impact on chip supplies, because many of the inert gases that are required in the production of these semiconductors do come from Eastern Europe. Yeah. So that's the kind of environment we are operating in. I can assure you that me and my management are very focused on what we do at our customer end. How can we grow with new products, new projects at our customers? We are very conscious of our margins, what we do in the field of improving margins. We are looking at what areas can we invest, grow further, and last but not the least, our people. How do we make sure that they are well equipped to do what they are supposed to do and one day take over from us as a management team? So I stop here, and if any questions, maybe we start with the people. If there are some people who wanted to call, then we come to the room. Yeah?
Yes, Mohan. Thanks a lot. And I would now ask the people who have registered already, and I will invite one by one to ask them their questions. So the first one, Sanjeev Jain from Icc Securities Limited. Can we have?
Thank you. Thanks for taking my question. I hope you can hear me.
Yes.
Yeah. Thank you very much. First, just wanted to understand, did I get it right? You said that you still don't see India as a potential export market for BASF. While we have seen a lot of export growth in chemical companies for India, I know many of them are supplying to BASF globally. And an ecosystem is getting developed because we are seeing a lot more capex than probably what we have seen in the last entire decade. What will give you a confidence, or what will make you think India as an export destination, say in next 5 years? What are the few things you will watch to see India becoming, and I'm talking from the BASF perspective, not from the industry perspective. What will make BASF Global think India as one of the key export market for its own subsidiaries worldwide, which will increase the entire addressable market for BASF India itself?
Yeah, thanks for that question. So before I talk about BASF, let me talk about the industries which you're probably referring to. When it comes to the ag and the pharmaceutical industry, where the country is quite competitive, especially in the generics field, or in the case of certain intermediates, complex intermediates, where they are suppliers to companies like BASF as well. There is the export competitiveness. Now, when I talked about BASF's portfolio to a large extent, I talked about the petrochemical based portfolio, where with our the fact that we don't have the raw materials in the country, we are essentially an importer of the raw materials to a large extent. The raw material costs in these kind of portfolios is pretty high as a percentage of the overall value of the product, and there the export competitiveness is what hinders BASF from looking at India as an export country. On the other hand, if there are areas where we do have the export competitiveness for BASF's portfolio, definitely we will also export, which is essentially the challenge, whether we have a cost position in the country for a portfolio like BASF to be export competitive.
Just to stretch a little bit here, I don't think India and China are very different when it comes to petroleum availability within the country. I think that remains the same. What puts China ahead of us is the probably capacity and the scale of it. Do you think India developing that kind of an ecosystem which will make BASF Global think India as one of the strategic export markets? I know we are strategic market for you, but more from an export market, or you don't think that possibility exists in next 5 years for us?
So it's like this, you know, when you look at BASF, even from a China perspective, the investments we've done, it's largely for the domestic Chinese market. We don't export much out of China. That said, it's not that we don't export at all. Whenever you invest into a capacity in BASF, when I talked about global economies of scale, you don't fill that up in the first year. Typically, there is a ramp-up curve. And in that, during that time, of course, we will export some part of the volumes to other countries. But will you invest from an export perspective? You will only invest into an export like an EOU kind of a setup when you have an export competitiveness base. Whereas both in China and India, your topic is very much right. From a BASF portfolio perspective, 90% of our products, or 95% even in some areas, would be for the domestic market. There would be about, maybe in the first couple of years to fill up the plant, we might export 20-25%, but over time it will be for the domestic market.
Great. One more question from my side. More from the import substitution portfolio perspective. India probably 10 years back lagged the minimum quantity to set up the independent plant within India, and hence we were trading it out. Do you think there is a large portfolio of BASF Global where India is now moving towards become or demanding an independent manufacturing setup within India for more from an import substitution, or do you still believe that the trading will be dominant even in the next 5 years for us? Now, this I'm asking basically because if we start manufacturing, the ROCs and the margins will be much better than when we are trading.
Thanks for that question. You could actually, I don't know if you have access to it, but the Indian Chemical Council had a 2-day-long event, 1st and 2nd of March, where McKinsey made a few presentations about the molecules where there is import substitution potential. You should probably get a hold of that if you don't have it. And it was quite an interesting one. What I observed there is most of the molecules where there is potential for a world-scale plant are products which are not yet the BASF portfolio. We are still quite upstream heavy. Which is where the conclusion was that we need a cracker every year in the country. We probably need products which are going into PVC, the polymers, and there is some substitution possible there. There are probably 1 or 2 products where there would be an overlap with BASF, but that also had a timeline which was further down the road. The thing is, when you look at the industrial development in any country, they all start with, from a chemical perspective, you have a refinery, then you have a world-scale refinery, then somehow you get into a cracker, then you get a cracker plus 1, and most of BASF's portfolio is cracker plus 2 and beyond. So in that context, to get to that, you need a certain evolution to happen in the country. So I can't put a timeline to it. It depends upon how fast BASF and the country grows. Now, I saw also the numbers from various sources, and I think there were government numbers as well. Essentially, after COVID, the 5 trillion target and the 1 trillion target for industry and 300 billion for chemicals in that has been pushed forward by 2 years, even from a government perspective. Now, what they are doing is they accept the fact that the 2 years has been kind of pushed back because of COVID. Our growth has been impacted, which also will delay that for BASF in the thought process. Now, what it gives is a tremendous opportunity for the country and for BASF, and this is where it's kind of important from that perspective, is from the what was discussed at the COP26 and the carbon neutrality. Now here, what I think is the country is going towards what is called a more conscious growth, and in terms of technologies which are less CO2 intensive, And this pretty much fits into what BASF is also having as a strategy, where we have committed to significant reductions by 2030 and a net zero by 2050. India has committed by 2070 for a net zero. So what I see is the possibilities for some of the technologies to be kind of leapfrog. So we don't have to go the same way as even for BASF as a company to do the same type of growth as we did in China. Probably the growth in India will be a different story, where because this overhang of CO2 emissions, the EU Green Deal has certain implications for us as a company and for our customers. Although we are not that heavy into exports, our customers are. The through calculated footprints from all the scope 1, 2 and 3 emissions will have an impact on what kind of markets our customers can access as well. So I see opportunities, Sanjesh, it's a long answer, but essentially I see opportunities coming up in that field, and it's not just a plain import substitution story. For me, or a China plus one story. It goes beyond that. I think it's an opportunity for the country and for BASF then to be a part of it, to potentially leapfrog technologies to get into a less CO2 intensive industrial economy. And the best example I can give for that is, when India jumped from the Bharat 4 to the Bharat 6 without going through the stage 5, in terms of emission cap. That was a brave move by the government to take that leap of faith that we can do it. And yes, BASF did contribute to that development to some extent in terms of the catalyst development with our automotive OEMs, although not in our company, but in the joint venture that we have. Now, the point is, I see the same in terms of the chemical industry and CO2 emissions, that there is a possibility to look at technologies where we can have a better footprint and grow faster.
Thanks, Mohan.
Thank you, sir. I got
We'll
few
take
more,
the-
but I will come back in the queue. Thank you.
Thanks, Sanjesh.
Thanks. We'll take the next question from the room. Varun?
Yep.
From Bryanston.
Yep. So thank you for, I think most of the questions have been answered. One on the opportunity on CAM and the precursor products, the cathode active material side. One of our group company has applied for PLI, and we also have presence in catalyst. So how do you see opportunity for us, because the EV adoption seems to be, there's a faster adoption. So how do you see, what is the opportunity that you see for us, and what is your thoughts on the PLI, the application which our group company has given for the PLI?
You mean the BASF group company?
BASF Catalyst India Private Limited.
Okay, that's not for CAM. That's for the normal catalyst, the emission. That's for the internal combustion engine, not for electromobility.
Sure.
So in terms of electromobility and the cell, I mean, at the moment there are no cell manufacturers in the country. So the whole thing is about creating that infrastructure. And BASF per se is not a cell manufacturer. We just provide cathodes. Or the CAMs. Now in this context, we have to evaluate. I think the opportunity is there. The whole strategy from the country, and again, it is part of the CO2 emissions, the pollution story, the air pollution that we have in the country. Will this take off? Yes, definitely it will take off. Will we? And I think the world underestimates the pace at which India will develop in this. We are way behind China. So China is way ahead in terms of this technology and in terms of adoption of EVs. And I think India will kind of go that direction. In terms of passenger vehicles, where are we? We are around 4 million vehicles in this country. And last year we sold about 80,000 on EVs. So I see opportunity for this to grow. And in due course of time, BASF will of course evaluate depending on what technologies are being adopted by the cell manufacturers in the country. So if it fits with our technologies, obviously we will love to participate in them.
And
But nothing at this point in time to announce.
And I mean, if we continue to remain a distributor kind of a model, right, like from 2010, 11, we used to import 40% of our raw material. Today, we import like 80% of our raw material. How do you ensure margin stability in such a case? What are the advantages of this model and what are the disadvantages? And you know, in an inflationary environment, how do you really ensure the margin stability?
So two parts. Firstly, like I said, we have a approach towards manufacturing. When do we decide to get into manufacturing in the country? And our manufacturing footprint has grown in the country. So we haven't declined, we haven't reduced manufacturing and switched to trading. That hasn't happened. We have grown capacities. We've invested in the last 10 years in the country into manufacturing assets, and we've grown there. That has a certain margin development and trend. We are own manufacturers. Risk also, sometimes it goes up, sometimes the margins go down. That's part of the game. And we're pretty much active in that field. Then comes, as the economy develops, there are opportunities where, I mean, let me give you a classic example. If I look at my chemicals portfolio or upstream monomers portfolio, I probably import order of magnitude in some of the bigger products, 10 to 15% of a world scale plant. With that, there is no other option for me. I wouldn't invest here into a plant with the kind of economics we have for only 10% of a plant. So that's the kind of order of magnitude that I'm importing. There's some products where probably I'm at 20% when I'm really, and then as this grows, when it reaches a kind of a point where I can say that okay, now it makes sense for me to stop this pre-marketing and then actually invest into a manufacturing facility. That's how the transition happens. So I don't think we will ever go to zero trading. We will continue to have parts of the portfolio which will continue to be imported, because that's how BASF steers its portfolio. We would not invest in a plant with a 20% utilization rate. That doesn't work.
It is fair from the parent's perspective, having a manufacturing centers and then distribution ends in each country. But I mean, how do you ensure, for us, how do we ensure the margin stability? Let's say last year also we reported, I think, 12% margin, and then last 3 quarters there has been a lot of variation. I mean, how do you ensure stability there?
So there are two parts. Again, someone asked this question as well, or alluded to it before. In a rising price environment, you always have a time lag. You buy and you sell 2 months later, obviously your margins will go up. Yeah. In a declining, tomorrow if the oil price drops to 50, obviously the inventory that we will have some losses in this inventory. So that kind of cyclicality, it doesn't matter. Even if you are a manufacturer, you will have some raw material which you will import, or you will have some functionality in there. The 60 days working capital inventory that you carry, the volatility of margins with that will not go away in the chemical industry. And it doesn't matter. You can take BASF Group consolidated worldwide, and you look at the books, there also you will find the same story. So that's something the chemical industry cannot avoid. Now, how do we manage? I can say that over a period of time, we do have a reasonable return also on the trade. We have a reasonable EBIT margin, we have financing costs taken care of, our full cost, and plus we have some PAT coming out of this. So that mechanism we do have.
Thanks, Varun. We'll take the next question from virtually. So Rohit Nagraj from MK Global Financial Securities.
Yeah, good evening, sirs, and thanks for the opportunity. Hope I'm audible.
Yes.
Yes.
Thanks. So the first question is, you mentioned about market shares gains over the last couple of years, and probably propelled by the unorganized to organized kind of a model. How are you seeing in terms of sustainability of those market share gains once the things normalize and probably the MSMEs who have gone out of the business for a couple of years come back and they restart the business? Thank you.
Yeah, thanks for that question. That's obviously a challenge. Now the question is, how do we maintain these positions also going forward? And I think there are a few aspects to this. Firstly, it's about how we keep our portfolio ahead of our competition in the context of new projects and new products with our customers. Secondly, it's about the service levels that we can give to the customers. And lastly, it's about our competitiveness. By definition, all my customers complain that my pricing is a little bit higher than my competitors, which I think is good for our margins. But that's something, what can we do in a reasonable way as to what value we create to our customers and how much of a premium can we have in the market? That's a fine balance that we need to play. There will be areas where we will get attacked again, especially in the low entry barrier kind of situation where an MSME might come back and attack us. I mean, it's something which we are aware of. But overall, I must say that in most of the areas that we are active in, I'm pretty confident that we will be able to maintain our positions.
Thanks, sir. That's helpful. So the second question is, which of our 6 segments are more vulnerable on the input cost inflation? And based on the current environment, have we seen any kind of demand destruction happening in any of these segments? Thank you.
Thanks for that question. Let me take the second part first. Have we come to a point in the world and in India in the context of demand destruction? I'm afraid of that. A sustained high period of, I mean, today, when you look at interest rates in the country, I mean, we are what, negative interest rates when you consider the real inflation, and also the inflation has been kept pretty much under control by central governments. Now, how long can they do that? I mean, you guys know better than me. I mean, I'm not an economist. But that's my biggest fear, that there will be demand destruction eventually happening because the purchasing power weakens with what's happening. That said, I can't say I think like that. I hope that some sanity prevails in this world and the situation that we have in Eastern Europe cools off, oil prices come down to a reasonable level. And I'm not saying down to the level that was back in 2019 and 20 when it was $30, $20, or even one night going negative on the WTI. That's not what I mean. But at a healthy level, $60, $70 from today's perspective would be a reasonable level, which would allow for a controlled inflation, central governments to manage the situation and so that demand doesn't get destroyed. But a sustained high price period will obviously have an impact on demand. We haven't seen it as yet, but I think if this continues for another 6 months, year, you will see some impact. At the end of the day, you and I are all salaried people. We don't get 50%, 60% increase in salaries every year. No? So our affordability does go down after a while.
Right. So the first part of the question in terms of the 6 segments which are vulnerable.
Yeah. Again, let me the transmission of costs, and it's about transmission of cost and the flexibility of margins. Now, when it comes to, so I wouldn't just call it vulnerability. It's about how can you address this. Now, when you go to upstream, the closer you are to the oil well, you have a higher impact of rising oil prices. So if you take, I mean, fuel prices, they change probably every day at the petrol pump. When it comes to plastics, commodity plastics, probably it's week, more or less. You come to the next stage, probably you have a month, but eventually it does catch up. Now, the further you go away, and when you look at stuff like some of the products in the country in terms of ag intermediates, which are 16, 17 steps down from the refinery, First of all, the percentage of raw materials to the overall value of the product is lower. So a doubling of oil price eventually may not be that much of an impact on the overall cost position. But then there will also be some impact there. But it takes a much longer period of time. So even within the BASF portfolio, if I look at various products, there are products which react in a week. There are products which takes a 6-month time for things to pass through. Now, in terms of segments, I would say the chemical segment and the material segment feels the impact right up front. The other end, nutrition care, ag, comes a little bit delayed.
Right, sir. Thank you so much and best of luck, sir.
Thank you.
Thank you, Rohit. The next question.
Okay, fine.
Yeah, go ahead.
Yeah, thank you for this meet, sir. The first question I'll actually just to extend on one of his question, more from when I look at your performance in the last 3-4 years, it's been quite strong actually, and I want to reflect on when I look at global console BASF, you've started contributing something meaningful from a profitability perspective as well. How does that narrative with the parent now work when you speak to them? How do they? What is the discussion today about?
Thanks for that question. I have to be pretty guarded because this is public information, and my bosses can also get access to this. So I have to be careful what I say here. I shouldn't oversell ourselves or whatever. It was. Let me take this discussion to my performance appraisal a couple of months ago. When my boss talked to me and her boss also had a discussion with me, what they said is the last 2 years, the expectation because of the rhetoric in the global scenario was that India is badly hit by COVID. We had tremendous problems, the number of cases that we were having every day, the migrant labor all going back on the streets. All this was published in so many newspapers around the world and media channels. The perception was that this country is going to be set back tremendously. And the first year, if you look at all the statistics coming out of the country, I think what we were minus 8.5% in GDP development, industrial growth was negative. So they were pretty astonished with the fact that how could BASF in India grow under these circumstances. So I gave them my usual simple explanation about what I gave you as well, what we did. It was as simple as that. And jokingly, I told my boss that, it is rather simple. We just grew volumes and we grew margins and control our costs. And that's all we did. And that's why we did well. So yes, that was a jokes apart. But the parent company does sit up and notice that what's happening in the country. Now, let me give you some statistics here. India is about 3% of the world's chemical market. And BASF in India is also roughly 3% of BASF's portfolio. So we are well represented. So we were below our, let's say, fair representation historically. Today, we are more or less in line with what the Indian chemical market and the opportunities it brings. So we have grown by growing our market share, growing above the market. We've achieved a performance in the portfolio where we are representative of what the Indian market does. Now, of course, we've done this with very low capital investment because we don't really have that kind of an environment today where we can significantly ramp up capital investment. But that's the question. When will that happen? And these are discussions which I have with my superiors on practically a regular basis. And keep my fingers crossed.
Okay. The second part is historically the ag portfolio has kind of helped the company do pretty well in spite of the chemical segment not doing well. And you also alluded to it that you've done exceedingly well. 1,400 crore of turnover in the year is quite commendable. In your previous Mr. Raman, who was the CEO, and when I've been hearing over the last 4-5 years, what I've heard is, or what I remember is that FY23 and FY24 are going to be material years for the ag business from a new launches perspective, and hence I'm assuming profitability and business growth. Would you want to kind of, is that the right thought that I have, or is there anything that I should?
FY23 means next year. I always get confused.
Next year and the year after.
Okay, all right. So like I mentioned, I just came off a product launch. In April, I will launch another product which will be a nationwide launch as well. So yes, we are on the right track in the context of our launch plans. But you also know that the launch process in this country has to do with also, it's not just about I wanting to launch a product for the company. My regulatory approvals also need to be in place. So we do have plans to grow. We do our plans to diversify our geographies as well as target markets in terms of crops and so on. It's pretty much in place. And I think we have a very sound strategy, a highly competent team. I mean, the last 2 years was the most difficult place to do business was in ag. Although there was no restrictions because of essential, but the fact was, just imagine, there's so much of COVID all over the country. I mean, numbers reported are one thing, but there's so much of possibilities. And these people have to come in contact with so many farmers and so on. So it was extremely difficult. So we had this strategy which said that whenever the district positivity rate goes above 5%, then we switch back to remote working. And we digitalize significantly our business models, both in terms of promotions using stuff like Facebook Live or different promotional topics. Also from a transactional perspective, almost 90% of our business, I mean, it was a pilot in India, but 90% of our business today is on digital mode. And that's something which won the BASF Group Digital Award in the crop protection business, the most fragmented business. So we made that successful. So I think in the context of strategy, in the context of portfolio, in the context of people, all three elements are pretty robust. And I look forward to a better presence of BASF in the ag market.
And these are all 9(3) products that you're talking about?
This is one thing which I don't understand. They always ask me 9(3), 9(4). I don't understand.
9(3) is basically the what do you call it? One which is under patent, and 9(4) is a generic kind of a product.
Okay, so we would be the two launches that we did are more on the 9(3) then.
Okay. And that trend should continue in the coming years as well, from a new launch perspective?
It will be a mix.
And so just one more part. 2 launches a year, or there are more?
Depends on the approval process.
In terms of pipeline, is there a?
We have a robust, healthy pipeline.
Okay. And one.
Yeah, please go ahead.
Yes.
Go ahead. I have pretty more, but I'll take one at least. Is that on the nutrition portfolio, we've had a difficult year this year.
Yeah.
And you did mention that you need to improve on the pass on, and I see your other competition, Galaxy, also actually suffering quite a bit on pass on of cost of raw material as well. It's an industry-wide issue. You think this is, given that raw material prices continue to be pretty volatile or high, is still going to, because the consumer companies are still not doing well, the demand is weak, and so it's, should I assume that it will take longer for you to pass on the ultimate cost increase and hence make money again?
So I wouldn't talk about my competitors.
Sure.
I can't do that. Especially the year 2021, I spoke about the challenges on the monsoon and the erratic monsoon and what it did to our ag portfolio. But what it also did was, unlike the year 2020, where the rural economy actually saved the country, the rural stress, which you see in two-wheeler sales, you see it in FMCG products, has been a worrying factor. And when I said earlier that I wish we have a normal monsoon, it was not for my portfolio. It was more for the country. Because what we've done from the time when we were more or less a narrow focus, soybean crop focused product, where if it didn't rain in MP, then our ag business was messed up. We've diversified enough. I think our portfolio has become resilient. And despite the challenges last year when we met the budgets, it's because of the diversification of our portfolio and the crops that we address. So it is more from the demand from the rural sector, which will probably enable FMCG companies to be more proactive and allow us as well to get some share. I think that's where I'm hoping for a good monsoon and a good situation for the farms.
So till that time, it's challenging is what I should read in your statement?
Again, prior to the start of the war, I would agree with you. But today, I don't know what to say. And I have no problem in saying I don't know what to say.
Sure.
The question was on the nutrition.
So the question was nutrition care, profitability wise.
Supply chain disruption you want to talk about?
Supply, that is overall. It is nothing specific to the business.
But more on the profitability side is what I was trying to.
Yeah, I mean, the whole, again, there, what gets hit first with inflation?
Yeah.
This is what gets hit.
Sure. I'm sorry.
Okay, thank you. The next speaker is Mr. Bharat Sheth from Quest Investment Advisors. So please.
Good evening, sir, and thanks for the opportunity. That on our expansion plan, what stage we are, which we were expecting to commission in FY23. So, and in that, with that background, and what is the asset turn that we are expecting out of that? How much capex total will be investing, and what will be the asset turn?
The dispersions plant that we are currently building in Dahej and which is expected to start up end Q2, early Q3, has a capex of around 100 crores. And from the market demand perspective, I expect that within the first couple of years, we should ramp up capacity and be able to meet the needs of the market. Does that answer your question?
Okay, so this is the only expansion we are pursuing, correct?
Yeah, one I talked about the Silasto expansion, which we completed. We have just started up the plant and it is working quite well. I was last week in Dahej. I inspected the plant as well. So it's doing quite well. And we are evaluating a couple of other things. But for FY23, this is the only plant that is coming on stream. There are some minor debottlenecks we are doing, but those are more OPEX measures and not CAPEX.
What is approximately asset turn that we are looking for both, I mean, what we started and the dispersion plant?
What is the question? Asset turns.
Asset turns.
What does that mean? What does that mean in your language?
How much if you are spending 100 crores, what is the potential for revenue per year?
Around 400 to 450 crores.
Yeah. So
around 400 to 450 crores is the sales that you can get out of the 100 crore investment annually.
And the plant which we started, that is same asset turn? The plant which we started?
Probably 1 to 5, yeah.
And in your initial opening remark, you stated that we are management focus is of course nutrition. You said clarified the thing, but about surface technology, what exactly we are doing to turn it around? Of course, underlying
that
is not growing.
Yeah.
Is a major concern.
Thanks for that question. So surface technology, again, it's largely related to the automotive industry. Now, while we could make significant progress in other areas of the automotive industry, here it's about surface coatings. It depends principally upon the number of cars made. There, we did not have that kind of progress that we would like to have. There are two aspects to that. One, like you correctly addressed, is the growth aspect, and the second thing is about the margin aspect. So both are work in progress for us. There are a few measures planned as well. And hopefully in the next months we are able to fix some of those issues. Both the growth is a larger, longer gestation issue. Hopefully the margins we address first.
Okay. Thank you and all the best, sir.
Thank you.
Yeah, we'll have Mr. Janak Merchant from Icc Securities. Please ask the question.
Yeah, thank you for taking my question. So we have almost more than 5,000 crore of trading business in FY21. And as per the related party transactions, this was from Hong Kong, Southeast Asia and Europe. Can you explain the back-end structure as to if we buy from Hong Kong, does it mean it's imported from China or Europe? In terms of the segments as to what gets imported from where?
So Hong Kong and Singapore are our regional headquarters. So most of our business units are either in Hong Kong or in Singapore. These are the product, for example, if a product comes from US or Germany or China, it would typically be routed via the product comes directly here, but the paperwork is routed through HSBC in Hong Kong or Standard Chartered or whatever banks. So which is where we have these intermediate entities through which the products are supplied. And what it also helps us, I mean, we took this decision back in '97, if I'm not wrong. At that point in time, these also used to be what we call regional distribution centers. So the bulk material would be invoiced into Singapore, and then they would re-invoice to the different countries. So Asia Pacific was financially served by these two centers.
So the question was more from, I mean, there may be tax reason or some whatever logistic reasons you may be doing this. The question was to assess the mal kahan se aata hai? I mean, does it? I mean, if I have to understand the supply disruption, mota, if say Suez Canal gets blocked, to yahan se band ho jayega. I mean, largely where does the goods come from? Are they coming from one single location, which is in X place, or 80% comes from one location? Just some broad.
We have pretty fragmented in that context. We have products coming in from Korea, we have products coming in from Malaysia, we have from Germany, from the US, Antwerp. So it's pretty fragmented in that perspective. So it's not concentrated in one location.
I have two more questions, sir. Has BASF India developed any products for BASF Global, or any products to be sold in India by BASF India, which they only sell in India? That's the one question. And on royalties, if you can comment on the policy, which has been, the royalty amount is pretty low. So if you can comment on the policy on royalties.
Maybe royalty you take. In terms of innovation, so we have developed a fair amount of India-specific formulations, especially in businesses like performance materials, industrial solutions. A standard product, let me give you an example, a paint formulation which is developed in Germany or in ASEAN may not typically work in a country like India because of the climatic conditions. So there are products developed here. So we have development labs at our innovation center in Thane, where we develop formulations, whether it's for care chemicals, whether it's for pharma or industrial solutions. We do develop formulations for the country. When it comes to base chemical molecules, that obviously is central research. I mean, because butyl acrylate is butyl acrylate worldwide. You don't need to do it for the country. So country-specific research is done in the country. Then at our innovation campus, which is also part of the Global Research Center, we do develop products, and there have been a couple of success stories in there. I mean, the campus opened 5 years ago. Just a week ago, we had a 5th anniversary of it. There have been a couple of products developed here which have even gone into export areas. Yeah.
Is it meaningful part of our turnover?
No.
So on royalty, it is on production, and depending on the products, we have different rate agreements with the owners of the IP. And in financial year 21, we had around 45 crores of financial year 20, we had 45 crores. And in financial year 21, it was around 35 crores. Yeah, it's because of the lower production. One quarter we lost this financial year 21, right? The April-June quarter we lost, yeah, due to lockdown. So there was less production. And also we sold our construction chemical business, which also had production, and we had to pay some royalty on that. So the royalty is lower, but otherwise there is no change majorly in the rates. It only defines the lower production in current financial year, which means financial year 21 as compared to financial year 20. But 10 crores is lower.
So instead of a value-added approach which some companies take or a percentage of sales, yours is based on production.
Production, yes.
Thank you.
So, do we have any further questions online from people? No. Okay. So, and then we can.
Also in the room, no further questions?
I have a few. So just one question.
Yes.
So two parts of that question. So first is we are catering to multiple industries right now. Has there been an incremental focus on any specific industry over the next few years? Like for example, we mentioned that construction chemical has been divested, but we are working on few projects in the auto segment to improve growth and profitability. But for BASF India, are we going to incrementally focus on any industry we are catering currently, or are we also looking at any other industries to cater to?
So the BASF's portfolio, like you correctly said, goes into a wide variety of industries. Worldwide and also in India, the number one industry for us is automotive. For BASF's portfolio, the number one industry is automotive. So clearly, wherever in the BASF world you go, first focus is automotive. There are other areas which, depending upon how this PLI thing gets implemented and what happens in the context of now we talked about e-mobility, what kind of opportunity that gives, which again goes into automotive. There is the electronics sector, there is a big push into electronics. What happens there could become a part of the story. I think ag will remain a focus area for BASF. We will continue to work on new products for the country as well. So these would be the top areas. Now, in the context of construction and infrastructure, what opportunities it provides for our remnant, because along with industrialization, you also need infrastructure. People have to build infrastructure. So what kind of opportunities that will throw up, and how BASF, I mean, I can't comment today that it will be a focus area, but it depends on what kind of infrastructure development happens here, which will open up doors for us. A couple of areas which again I'm interested to see how things evolve is in the textile and footwear sector. Although we are no longer in the textile chemicals business, but we still have parts of our portfolio which goes into high performance textiles and also into footwear. So there seems to be, and I'm not talking about leather chemicals now, the footwear overall. In that context, there are areas where BASF is still pretty active, and we are looking at what happens there.
And just lastly, throughout your opening commentary, there's many questions also that you answered. Incremental opportunity that you mentioned, plus incremental skill development, etc., that you are doing. Is it suffice to say that incremental growth for BASF will come at better profitability also?
Keep my fingers crossed. That's what we are working for, my friend. At the end of the day, like I mentioned, the philosophy which I always state, and it's a very simple one, it's a right to exist for any business. It's about profitable growth. You need to work on that. If we don't do that, we are failing at our roles. And I have no qualms in admitting that this would be our endeavor. Now, I can't guarantee that every year will be better than the previous year, because at the end of the day, we are all in cyclical. There's fair part of our business which is cyclical, commoditized, and commoditizing specialties also are part of our portfolio. But that's the endeavor of the company. And what we try to do always is, it's very simplistic. Like I told my boss and my mentor a couple of months ago, grow volumes, grow margins, cut costs. This is all that we do. And any business, that's the answer.
Just taking this question forward, our share in the group revenue is growing. So would that mean, most of the raw material is coming from the group companies? So do we have better say in terms of pricing when the raw material is imported?
So arm's length principles apply.
Correct.
And OECD tax laws and so on and so forth. So there are certain things that apply over there, but the principle of materiality, of how material you are, I mean, even with, not just when I buy, also when I sell, different customers at different levels get different rates of discounts to benchmarks. So yes, that's applicable to us as well.
And as and when the, let's say the Woven plant comes in India.
I didn't say that.
No, I'm just saying, we are
my bosses will say, you promised something.
No, would it become a profit center? I mean, whenever, let's say a plant is opened in any country, does it become a profit center kind of a thing, or how does it work?
So I'll give you how BASF works. BASF works in 11 operating divisions. There's a president for every operating division who's responsible for that business, full P&L. And depending on the portfolio, whatever plants we invest in will be part of that division. How we decide legal entities, for example. Now, your question probably not as a profit center question, it's a legal entity. Will it be the listed entity which will have it? Or that depends on how we do it. So even in China, where we've invested so much, there are certain areas where you have to do joint ventures. Then by definition, it might be because of technology, it might be because of raw material access, it might be because of government regulations, which still exists in some parts, in some businesses. So based on all that, the structure of the legal entity will define, and ideally, I would also want a lot of businesses in the listed entity. There are certain things, but like we discussed some time ago with the project which we were discussing with the Adanis, that like I clarified before, that could never be part of the listed entity because it's a joint venture with a completely different thing. Now, if it is not a joint venture, then obviously there's a good chance that it will be within this profit. Again, I'm not preempting anything. There is no Verbund plant that we are talking about at this point in time. I have to make that disclaimer.
Yeah. We have
just one more question.
Yeah, please go ahead.
Yeah, we have been very aggressively launching new products in agrochemical segment. How do we keep track of the success of molecule? Do we have some target in mind? Let's say products launched in last 5 years should contribute so much percentage to the revenue. What is the number that we keep in mind? So it takes time, right? Because you need to demonstrate on field, the product has to become successful and then it picks up.
So there are numbers for this, not just in terms of vitality index, but also in the context of the footprint of the product. So we do have targets in the context of the toxicology, the CO2 footprint, and our own targets to improve our position as a sustainable supplier of products. So there are targets for that. In terms of vitality, I mean, in the index for ag specifically, I don't remember, but as a group, we do have targets for what we call accelerator sales, and accelerator sales is roughly about 20% of our portfolio, 20% of our portfolio, which is pro sustainability, improving the overall footprint, the emission footprint, and so on. So it's roughly about 20% of our portfolio. But this vitality index question, maybe I'll look it up. I mean, today the focus is more on the footprint part.
Yeah, we have a speaker online, Mon. So
yeah,
this is Vishnu Gopalakrishnan from Steinberg India Advisors. Please, Vishnu.
Yeah, can I go ahead?
Can you ask it?
Yeah, hi.
Yes,
Thanks for taking my question. I have two questions. One, broadly, can you give some color on how large is auto to us as a total share of revenue? And within auto, is it possible to kind of call out passenger cars and the rest of it?
Okay. I think we are pretty much in line with our global business, where we are in the order of magnitude of about somewhere between 15 to 20% is our exposure to the automotive industry. I do not really have a split between two-wheelers, passenger, and the heavy duty, but I can say that a large percentage is into the passenger car segment. Our exposure to two-wheelers and heavy duties is relatively lower.
Okay, thank you. So if auto is, let's say, between 15 to 20, and let's say ag is also broadly 15, any other large verticals that you can call out?
I mean, the segment analysis, chemical segment is what, about 20%, 25% of our portfolio?
Yeah.
But then that is diversified into so many, so it's not like a single industry. It goes into so many industries, but that's a pretty large business for us, the overall chemicals business.
Okay. And if I look at, let's say, BASF Global's revenue or vertical mix, are there any large client industries that are not part of our customer group in India? And that can be potentially, obviously, a room for growth going forward.
So in the context of opportunities in the country, which in terms of a match to our portfolio, I don't think we've missed out on anything in the country. But there could be areas where the market simply doesn't exist in India. So for example, the classical the case I give is about electronics. I mean, we consume a lot of electronics, but we don't manufacture anything over here. We only assemble stuff. So there are parts of our electronic chemicals portfolio where we sell nothing in this country.
Okay.
But that's an opportunity, clearly. I was in this meeting with a few people, and the push towards moving away from assembling to actually manufacturing some of these electronic materials in the country is an opportunity where we have to explore when that happens. How can BASF participate in that?
Sure. All the best. Thanks for taking my questions.
Thank you.
Thank you, Vishnu. Yes, Mr. Padhai.
On this, in the second half or first half presentation, September presentation, there was a slide where picture was shown where your team was presenting on opportunities in EV, two-wheeler, three-wheeler, and how BASF can participate in that. Could you elaborate? What are we doing, or if it becomes a success in India, let's say if it becomes electric?
Yeah, so opportunities are there, like I talked about in the cell manufacturing, where obviously the cathode is an opportunity. The second opportunity comes in the performance material segment, where all these things require connectors, charging stations, the wirings and cables are different to what is there in the ICE vehicles. So there are opportunities for development in also engineering plastics and so on.
And these are all as good. Are they being as like you mentioned in electronics? As of now, it is largely assembly. In electric two-wheeler, three-wheeler, do you see it being manufactured from a component ecosystem perspective in India, or do you still see an assembly?
That's what PLI is about. Otherwise, PLI fails.
Right.
So I believe there is execution will in the government. And in the industry also, when I talk to my peers in the industry, there is will in the industry to go towards that. And that gives me a sense of optimism that it will create opportunities for chemicals and materials players in the country.
So that's a great opportunity for you as a company. Then
not just me, all my competitors as well.
Sure. The second question was on this, again, I have an update till this first half, which is that there was very minimal inventory gain till first half. 9 months in Q3, did we have any material inventory gain in the business? From a profitability perspective, the reported profits, how much is there a material inventory gain number?
I think in the 9 months also it was not material.
Okay.
Because like I said, I remember oil was at around 65 in March. Towards the end of the year, it had gone up to 80 on average. Some days it was 85, some days it was 75. So the order of magnitude from 65 to 80. So yes, that happened gradually over 8-9 months. But now it has gone up from 80 to now it's 120. So now if we are able to, I mean, there are two possibilities. One, we can't push through the prices and then we lose a lot of money. Or there will be inventory gain because of the time lag.
Sure. But the related question to this is that in the material segment reported, EBIT has been extremely strong in the first 9 months. If it is not inventory gain, then the question is that such a great performance. So is this sustainable then?
So there are multiple things that have happened there. Volumes have grown. We've grown significant volumes. Product portfolio has shifted. So we've introduced quite a few new products. And we've also improved margins. Some of those things, I would say we should be able to sustain.
That would be great. And lastly, just to reconfirm, given that Celasto will now perform, as well as dispersion doubling capacity will perform in the coming year, these margins are quite high, and you said you're fully sold off or fully booked for those capacities. So logically, then FY23, from a chemicals perspective, margin should be pretty decent in those segments. Great, yeah. And one more question, sir. So there are various questions on capex. So maybe we don't want any specific project names or where you are looking at, but any direction towards annual capex that we should work with?
No, I myself don't work with that.
Okay.
So no point in me telling you something or making something up. Like I said, there's a difference between promoter-driven companies and multinational companies. So we have to follow certain processes, and this is with these processes. We have to establish a market case. We have to do a proper project to it, and it's not something linear. Typically, in any country within the BASF group, you will see these are step changes and not linear. Linear stuff will be the replacement, some minor debottlenecks, these will be linear. But the step changes, it takes a lot of effort. And I always say BASF is a slow company. It takes time but once it decides to do something, it will do it. Execution capability is there, and we're pretty good at that.
Okay, so a related question on this is that, let's say electronic manufacturing, when we meet these companies who are into it, including our own Tata Group company, what we get to hear, or Foxconn, they tell us that indigenization will move from 15-20% towards 60-70% over the next 3-4 years. At least that's what their direction is. Where they're going. Does it mean that, and do you already have manufacturing of those internally in BASF India, or you will have to scale as and when that manufacturing comes?
So today we don't manufacture many of those products here, or actually none of those products here.
Okay.
As and when, so I'm also in talks with some of your companies. When the opportunity is right and it makes sense for BASF will announce. But at the moment, there is nothing.
Okay.
So I have a last question from my side.
Yeah.
Related to the capital expenditure, not a number sort of thing, but when you put in a large plant in Dahej and there were some heating problems for it to start, it was explained that when you put up a large complex, not to look at it as a sort of, you put in so much money, this much return will come on the project, but to look at it as a big foundation for a plug and play in future when investments are done, that there will be much smaller investments because the large base is already in place. So can you, how much optionality does now Dahej give you for your future over the next 5 years to do other things?
So, what we did last year with the doubling of capacity of Silasto, or what I'm doing this year, I don't invest any infrastructure for it. That's exactly the plug and play comes from that factor, that we don't need further infrastructure at this point in time. But now if I come up with a completely new mega project, then obviously I will have to do it. But for the existing product lines, debottlenecks or another line of the product, this infrastructure we have.
But how good is flexible is the hedge to incorporate, say, new things, or it'll have another large investment, maybe not now, but maybe after 5 years, maybe required?
Depends on what we are talking about. I mean, if you talk about some of those big the petrochemical, the land itself is not enough. Then you need to get into somewhere where there is land available, port next to it. So those kind of infrastructure needs to be looked at. But if there are plants, why just Dahej? I mean, we have Mangalore as well. We have Panoli, where there are opportunities for us to expand product portfolio.
And if you can comment on the utilization level, that's the last question.
Today, what we are around 75-80%. Some months are 75-80 around that.
Okay, we can assume this goes to 90%, 95%, or is you assume 80% is a...
Again, it's a multi-product kind of facility. There is potential for us to grow, but typically I say that once we hit that 80-85% mark, it's about time we think about debottlenecks in one or the other places. Because again, our customers also don't buy the same quantity every month. When I say 75-80% on average, there might be months in which I need to give 100%, 120%. And that's where you play with inventories, you play with production scheduling and so on. So when it comes to in multi-purpose plants, when it comes to that kind of level, we again start thinking of, and that's where the dispersion plant where we said we will expand, or Silasto will expand. There are a couple of other areas we are considering as well.
Thank you.
Maybe I can squeeze in one last. On the auto sector, when we speak to OEMs now, production pipeline looks quite robust actually. Even though there is chip shortage, but it looks like that they are heading for a fairly decent production ramp up. Do you see that kind of inquiry level as well?
Demand side is not a problem, supply side is a problem. Exactly. Yes.
No, so even production, at least Maruti tells us that they will be able to produce more now.
Yeah.
So you see that happening as we speak?
We do see from there is some shift of market shares as well that's happening between the OEMs. Overall, I would say that we see an uptick in demand in the last couple of months. Yeah.
Okay. Thank you.
So do you see any major product gaps between our product portfolio and our parents' portfolio that you can potentially launch in India?
Not where there is a market, we don't see a problem.
It's all
typically it's an area where where either the market is not there, or we don't have the scale, then we import. But I don't think we are missing out on too many opportunities. So I hope I've been open enough with all the questions. Sometimes I saw these people looking at me as well, but I was too open. But that's the whole purpose of meeting, right? At the end of the day, your queries, your questions need to be answered to the best extent possible. So we've tried to do that. So I thank my team for the support as well, and thank you very much to all the colleagues on the phone as well as the colleagues here. Pleasure meeting you. Now, what we would actually, maybe Manoj, you will announce it as well, right? We do this in a structured way going forward.
Yes.
So that you have a regular kind of interaction. Maybe Manoj, over to you. Thanks.
No, thanks, Mohan. I think thank you everyone again from our side for this virtual meet and analyst meet. I think going forward, at least we have decided that we will do it in a very organized fashion. So we will have on a half-yearly basis. So the next one will be sometime in May or June, and thereafter or in November or December. So that's how we will do it at least twice a year. Our plan would be in that fashion, so that at least we can give you something better in terms of information.
Would it be possible to do it quarterly or not possible?
Let's start half-yearly.
Yeah, and maybe at the end, I think we can also wish all of you a very happy Holi celebrations and take care, and we'll meet again next time.
Yeah, thanks for coming. And despite, I mean, I can understand you guys have family commitments as well for Holi.
So thank you very much.
Very happy Holi to all of you. Thank you. Bye-bye.